When people hear about financial investments, they often think of large amounts of capital, with Warren Buffett sitting in his leather armchair and a chart behind him with a green arrow pointing upwards. Or they think of the shady fake guru who can't wait to steal your money. This common perception, and the fact that we're broke, has kept personal finance away from many people, when in reality it's simply about knowing how to manage savings of any size in the most fruitful way possible. And I know it has a boring name. So in this video, in collaboration with Scalable, I'll try to answer the biggest questions about investing. Investing in the stock market is like gambling at a casino. Unlike gambling in casinos, which is specifically designed to have a much higher loss rate than the win rate, unless you use the same lucky charm you used when you won those €5 the other night with Jupiter in your favor, investing in the market has many levels of risk you can choose from. Depending on the financial instrument, you can choose a higher level of risk to try to get a higher return, or choose a safer investment that offers a more modest return over the long term. Someone on the phone suggested trading to me so I could make a nice little nest egg in a short time. Trading is highly speculative and requires study, skill, a lot of time, and most people who do it lose money anyway. It's not an investment, it's a full-time activity that you can't just improvise. Who's suggesting it to you? Someone with a so-called financial strategy most likely just wants to squeeze money out of you through fake courses, secret messages, or affiliate programs. I made a dedicated video with some tips to spot these scammers. You can watch it for just €100. No, I'm kidding, there's a sponsor. But actually, it's all a scam. Better to keep your money safe and untouched. In fact, not investing your money is 100% safe. Yeah, safe to lose it. What people don't really notice in the short term is the risk of inflation, the loss of purchasing power of money. But if we think about it, we know very well that today a kebab costs €7, while 4 years ago in the right places you could find it for €3.50. So the things you can buy today with €100 will cost more in 2 years. It might seem like you've protected those €100 by keeping them under your pillow, but in reality the money you'll have in your hands in the future won't be worth €100 anymore, but less, even if it still says €100 on it. It's as if by doing nothing the money is being invested. Titi automaticamente in un titolo che nel tempo perde sempre più valore. That's all nice, I've got goosebumps, but I don't understand anything about finance. It seems like stuff for guys in dress shirts. The basics of finance are simpler than they seem, and on YouTube you can find a lot of educational videos that explain them from scratch. Of course, it would be nice if it were taught in school too, but those are just the dreams of an old madman. You'll find that one of the fundamental rules for investing effectively and with less risk in the long term is diversification, which means instead of putting all your money into a single stock, you buy many different stocks, so you don't depend entirely on the performance of just one. I already didn't know which stock to buy, and now you're telling me I have to be like a sommelier for the best companies to invest in? Well, I have good news for you. Most small investors are regular people like you, with a job, hobbies. A guy who makes noise with the leaf blower outside once a week, even when there aren't any leaves on the ground. And above all, without the time or desire to analyze the metrics of companies on the stock market. There are ready-made financial instruments designed just for us, people who don't want the hassle. For example, ETFs that include hundreds, sometimes thousands of stocks from all over the world, selected according to specific criteria. Basically, you just need to buy a single ETF and you're already investing in a diversified way. These types of long-term investments are called passive investments because you're investing in something that's already set up. Because I don't want to pick stocks individually or anxiously watch charts wondering when to buy or sell. How would I know? I only sell chestnuts at fairs and I have no intention of wasting time on these things. You only live once, damn it. The chestnuts are burning. You don't even need to have a lot of money. Nowadays, there are apps that let you start even with just a few euros and you decide how much and when to invest. Scalable, which I'm collaborating with for this video, lets you do that. It's 100% German, safe, regulated, and you can start with any amount. They've also prepared a free ebook to help you learn more about ETFs. You can find everything in the description. In case you pretend not to know, keep in mind that investments must be declared as income. It's a step that happens automatically with banks based in Italy. They also pay any taxes for you. With Scalable, however, which is a German bank, you'll receive a free pre-filled report to file the tax return yourself or to give to your accountant. The automatic tax withholding regime is more convenient for those who don't want any hassle. The self-reporting regime, on the other hand, gives you more flexibility with taxes, like offsetting capital losses and so on. Remember to always find out which regime the intermediary you invest with operates under and choose the one that best suits your needs.
It's important to comply with tax authorities
if you don't want trouble. But there's always the risk of losing money. Of course, investing always involves risks. That's what the disclaimer says that I'm required to add whenever I mention investment platforms, even though it's the main topic of this video. But not all risks are the same, and they vary depending on the type of investment. If you want to earn a lot in a short time, the risk of losing a lot is also high, like in trading. The fake trading guru fails to highlight this aspect. If you want very low risk in a short time, you know that the returns will also be minimal, like the interest on the cash in your account. For example, Scalable pays a small percentage on your cash balance every quarter without locking your money. If you want to get more with relatively low risk, one option is to extend the time period, diversifying your investments as much as possible. This is the case with passive investments. For example, by choosing a global ETF, you can invest in hundreds of companies around the world, a bit like investing in the market itself, and let your savings grow for years. Looking at the past, the market has always grown in the long term, so you can assume that the risk decreases the longer the investment lasts. Is the risk 0%? No, because 0% risk doesn't exist.
It's a ghost. No one has seen it.
To sum up, there are many financial instruments designed for every need. Knowing them doesn't just mean making your savings grow, but also protecting them from scams, gambling, and inflation. Because every investment choice involves risks or costs, including the choice not to invest.